Freshly announced trade tariffs from the White House may be sending stocks into a tailspin, but a market correction is inevitable even without them, billionaire investor Jim Mellon told CNBC's Worldwide Exchange on Tuesday. The trade war worries are certainly having an effect on the market, but the market is reacting because it's already far too expensive, Mellon said. The U.S. is selling at 32 times cyclically adjusted price-to-earnings (PE) ratio, which is an all-time high. Surely it's time for a major correction anyway. Mellon is not alone in suggesting that today's stock market is the most overvalued on record, more so than in 1929, 2000 and 2007. Chairman of asset management fund Bernbray Group also pointed to overcomplacency in markets and disproportionate buying of what he considered to be highly inflated assets like tech stocks. And according to the investing mogul, the trade fears are just an excuse for market players who are already looking to sell. There has been far too much complacency, far too many buybacks by corporations of their stock which have supported the market, far too much concentration of ownership, particularly in tech stocks in the U.S. And it's time for a very major correction, which is I think what we are embarking on. Tuesday looks set to be a very rough day for stocks, with the Dow Jones and S&P. The Dow has fallen for the past 5 trading days, and the last time it fell for 6 straight days was in March 2017. The investor's warning came despite his not taking stock in the idea of a trade war. I do not think there's going to be a universal trade war because globalization has been so good for everyone, including the US, and I'm sure President Trump knows that, Mellon added. But he is also a very good negotiator. He's shown that to be the case in the last year or so. So he may force the Chinese to do something about this ridiculous trade imbalance that they've mounted over the years. America's trade deficit in goods with China hit a record $375 billion in 2017 and continues to widen. Between January and April of this year, China's trade surplus with the U.S. was $80.4 billion. Still, a minority of economists see this as detrimental to the U.S. economy. American companies operating in China have pointed to unequal market access and poor intellectual property and legal protection as a much larger problem for U.S. business with Beijing.